Welcome to another edition of Walter's Home Buying Tips. Today, my guest is John Schutze with Supreme Lending, and we're going to be talking about PMI, Private Mortgage Insurance. John, can you tell us a little bit about what PMI is and why we need it?
Sure. So PMI is mortgage insurance for the lender. What it does is it gives the lender some assurance that if a borrower defaults, they're going to have some coverage in the case of a foreclosure. So they'll cut their losses if the borrower defaults.
Mm-hmm.
It's a good thing, actually, to have PMI. The fact that PMI exists is a good thing, because without it, many borrowers would have to put 10 or 20% down to buy a home.
Mm-hmm.
And so with PMI, you can put as little as 3 to 5% down on a home. So it really opens up homeownership to more people.
That works great.
The other thing about it is, many people think it's a very expensive thing, and that you should not pay PMI under any circumstances.
Right.
It would be great if everybody had 20% down and didn't have to pay PMI. But the reality is, PMI is not that expensive, and it's often it's a tiered pricing structure. So if somebody has good credit,
Mm-hmm.
it'll actually lower the PMI rate. And so
Sure.
it oftentimes is not as much as you'd think, and with rates as low as they are,
Mm-hmm.
you might not even notice it.
Great. So you're saying, though, with 20% down, somebody would not have to pay that.
That's correct.
Okay.
There are ways around paying it too, even if you're putting less than 20%
Mm-hmm.
down. And so oftentimes we'll structure loans or give folks options. One might be 5% down with mortgage insurance.
Mm-hmm.
Another option could be that you could still put 5% down,
Mm-hmm.
but we do two loans. So we do what we call piggyback loan. You'd have one loan for 80%. And a second loan for the difference, so for the 15%. So you'd put 5% down, you'd have a 15% loan and an 80% loan.
Wow.
Now, the negative to that is that second loan might have a little bit higher interest rate, so the rate might
Sure.
be 5 to 6%. But when you run the number, the payment actually is generally a little bit less than paying the mortgage insurance.
So there is a way around it. Now you know what it is. And if you need more information, John is the man with the plan with Supreme Lending. So go down here and call him at his number, or you can call me at my number here, and we'll see you later. Thank you very much.
Absolutely.
All right.